Hello, my dear students. Welcome to my channel. Today we are going to see question number 5C for 10 marks in your recent this mock test paper, which was held on 10th August 2026 for those who are appearing in September 2026. It is just a model how the question paper will look like almost, but not exactly 100%, but it is a model for you. Okay. So you have to attend the mock test paper so that your practice is very good. Even if you are just going through, you know that the sum is, I know this, that. But when you are sitting in the exam hall, the nervousness will be much more. So you may not be able to think properly. So in order to have a cool and calm mind, what is the best thing is that just make your mind map. Every time when you see a sum in your house, you just make the practice. What I have to do, you just go on thinking about that. And especially before you go to bed. That goes deeper into your brain. This is the practical thing what is experienced by expert people and it is given by them. It is not my own idea. So this was practiced by me also. That works very well. Believe me, it works very well. So think about that. What I have to do if the preference share capital redemption, what are the conditions? What is my in case if they are issuing equity shares, what should I do if they are issuing right issue or bonus issue? Then whether the bonus issue is to be included and all. So just make a recap in your mind. Okay, so that it goes into the deeper part. When you are asking the question, it will just give you the answer, your mind. Okay. So now let us get into the sum without wasting much of your time. The books of Novatech Systems Limited showed the following balances on 31st December 2025. Okay. So it is on 31st December, the balances. 60,000 equity shares were there already fully paid up and 12% redeemable shares fully paid up. And now there are 4,000 shares which is not fully paid up, and these are issued in the next financial year, 31st December 2025. This is on 1st April 25. So undistributed reserves and surpluses, they have given P&L, general reserve, securities, capital reserve, etc. for redemption, because it is a question of preferential redemption. For redemption, they are issuing 6,000 equity shares of 10 each issued at 10% premium. At the same time, 12% preference shares are redeemed. See, you have to be very careful about this again. It is again 12% preference shares are redeemed. Okay, 12% preference shares are redeemed, not this 10%. 12% preference shares, 36,000, they are redeemed at a premium of 2 per share. The whereabouts of the 200 shareholders are not known. So you have to be careful about this point also. Sorry. First point you should be careful about. I am going to give this sum in a very faster way so that I don't want to waste your time because you are all preparing for your exam. So first point you have to remember, you should not take this 4,000 because it is issued on 1st April. They are going to redeem only 12% preference shares. Okay. This 4,000, this 36,000 they are going to redeem. Clear? Okay. Then when they are redeeming it at a premium of 2 rupees. Okay. The third point is they are not 200 shares. The whereabouts are not known. So these people will not be paid. You will make due for 36,000, but when you make the payment, you will make the payment for 35,800 shares at the rate of 12 rupees. Okay, with the premium of 2. And how you will make the payment? By making redemption of equity shares. So redemption of equity shares will be around, it is at 60,000 only the face value. They are issuing at a premium, but the face value will be only 60,000. And you have to redeem the face value of 36,000, that is 3,60,000. So only this much equity shares you are going to issue. So how much you need? The 3 lakh you need for CRR. CRR has to be created out of general reserve and all. So we know that general reserve we have got 2,40,000 and P&L account we got 60,000. So we are going to create the CRR out of general reserve and this P&L account. Okay, we got plenty of that. And this 2 rupee per share will be written off against P&L account because that will come around 36,000 into 2. That you should immediately calculate all these things in your mind. 36,000 into 2 will be 72,000. Okay. Here you are using 2,40,000 from general reserve. Only 60 you are taking from P&L. So 1 lakh is left out. Out of that, the 72,000 will go out for adjusting your premium. Okay. And the security premium which you are receiving against equity shares, that will go to security premium account. Okay. Now, an issue of bonus shares are also made. 2 shares for every 5 shares. 2 by 5. And how much is the existing shareholders? It is not given to the redemption. The equity shares issued for redemption are not eligible. So only you are going to give for 60,000. Sorry, 2 out of 5. 60,000. So this will be 24,000 because 12 fives are 60. You should, your table should be very, very pakka because it will take time to set your calculator and put your hand so that you have all those things. Minimum possible you use your calculator. Where compulsorily required then use your calculator. Otherwise, just do that. So 24,000 we have to issue. This will be out of 2,40,000. 10 rupees only we are going to do. This we will be doing out of capital redemption reserve. We got already capital redemption reserve 3 lakh. Okay. So 2,40,000 CRR will be debited to bonus issue to shareholders, then bonus issue to capital account. Okay. Because whenever you are issuing a bonus, what happens? It is also known as capitalization of profit. Because this dividend which is otherwise available for dividend is going to get converted into capital account. Okay. Now let us get into the journal entry. Now it is nothing is left out. Only bank account debit first. You can write first preference due and payment to shareholders also. And you can write like this also. But keep it in mind, make the working note very, very thorough. Otherwise, simply ICI will put a cross. It will not give any mark if your working capital, working note is not included and it should be in the proper way. Okay. So better you write here itself. Bank account debit and make a working note separate. That is required for creation of capital redemption reserve. Okay, bank account debit 6,000 into 11, 66,000 and write the narration also properly. It is issued at a premium of 10% or redemption of preference shares. Then you write equity share application and allotment account. This amount is transferred to equity share capital account to securities premium account also. Then now making the due for redemption. 12% share capital will get debited with the face value and premium will get at the rate of 2 rupees, that will be 72,000 and the total will become due for preference shareholders. But we will not make payment again. You have to be very, very mindful. Make the points. How many points you have to remember and what else you have to do. We are not going to make payment for 200 persons because we do not know the whereabouts. The address is not proper available. So preference shareholder is debited for 35,800 into 12 to bank account. So preference shareholders paid except 200 shares. Okay. So write like this the narration. Profit and loss account and don't write in the short form. I am writing it for faster, but you have to write it in full form. So to premium, so don't forget to transfer the premium on redemption of preference share into P&L account. And then we are going to create capital redemption reserve. So general reserve debited and P&L debited to capital redemption reserve. Right like this. Amount transferred to CRR as per the requirement of the Act. You all know that as per section 55 of the Companies Act 2013, we have to transfer this. Capital redemption reserve is debited. Now bonus is issued to shareholders. That is for every 5. Issue of bonus shares, 2 for every 5 to existing shareholders. This is totally at free of cost. And but the company's paid up capital will get increased. Bonus to shareholders to equity share capital account. Bonus issue is transferred to capital account. This working note, you make this reference here when you write the capital redemption reserve. So put the reference there also. Face value of 20% redeemable is 3,60,000. Face value of equity shares issued 6,000 into 10 is 60,000. CRR required is 3 lakh. Okay, that's it for this video. If you like my video, please like, share, and subscribe. And my advice again, once again, make thorough study of your company accounts. You are going to get almost 20, minimum 20 marks. Okay, that will be up to 25 marks. So don't forget to subscribe my channel if you have not yet subscribed and give a thumbs up. Thank you for watching my videos.